Despite renewed falls in equities markets and broadened signs that investors are bracing for a major slowdown in the global economy, most central banks appear determined to press ahead with the most aggressive and synchronized tightening circles since at least in the 90s. While policymakers may eventually relent, analysts are of the view that the willingness to impose further pains on financial markets will continue to be underestimated as the global economy continues to halt recovery from the COVID-19 pandemic and ongoing energy crisis. Well, joining me live virtually from the United Kingdom to look at all of these issues is the startup founder of Wealth Hackers, Mr. Gbenga Onifade. Good afternoon. Thank you so much for your time. It's good to see you.
Good afternoon, sir.
Yes, let's start with inflation. It's hitting us badly here in Nigeria, and we spoke about it earlier, looking at the cost of gas, cost of any other energy sources across the board. Take us through what is playing out in the United Kingdom and how you're all coping with the situation, especially with central banks trying to tighten all ends.
Yeah, it's unfortunate. It's a global pandemic that hit everybody 2 years ago, and the CBN acted, in all fairness, in what to they played in people's hands to what they think, how to alleviate people. If you cannot go out, unfortunately, you cannot feed your family. So therefore, as a result of that, money was found and printed from thin air in order to alleviate, should I say, or subsidize people's pockets. And now we are paying for that roll on 2 years later. And as a result, we're talking about inflation's actually always been there, but now it's actually staring and hitting us all in the face. And it's a global situation, unfortunately, right from the UK or Europe-wide to United States of America. And of course, you're feeling the same thing in Nigeria. So yes, everyone is feeling the pinch right now, unfortunately.
We see some effects on global markets. I think last I checked the Dow Jones and all of the stocks were down. Well, what's the impact of all of these developments across the global market?
Sure. So when we do have inflation, one of the major the CBN's core principle or their idea, the main job is to make sure they curb inflation. And the CBN is or the central bank generally, apologize there, the central bank is supposed to curb inflation. And one of the things they try to do is if inflation is put in control, because central bank is meant to be, of course, neutral. If the inflation is being curbed, of course, natural growth will take effect. But unfortunately, when inflation prints is quite high, and there's the CPI, which is the consumer's price index, which is talking about the consumers' feelings, how they feel with it's talking about the inputs with the market, and if it's coming out as being very hot, it's the job of the central bank in a way what they call the demand destruction. Really, they put up interest rates, and that is actually is an antithesis to growth, because if interest rate is put higher, then of course, which means your corporations, their interest, the rates of interest from the central bank or from the banks where they borrow loans or they get loans from the bank, it's going to be quite high, and that would affect inflation again. Well, sorry, that would affect growth. It will stifle growth. So if the corporations who are supposed to be employing and who are supposed to be, be in charge of growth, if they have to borrow from the banks, and if the interest rate is going to be very high, unfortunately, it will stifle growth. They would not borrow as much, and of course, because they would not be able to employ that much either. And of course, this has been affected general-wise, and is affecting global stocks generally. I think this afternoon, the GDP came out today, and it came out as negative, worse than we expected. And when we have 2 quarters, back-to-back quarters of negative GDP in GDP price, that just tells you we're technically in a recession. Now we do have the White House trying to redefine what recession is and saying, well, we're not technically in a recession, but technically, according to the economist definition, globally we are in a recession, unfortunately. But they're not saying that out right now.
Also, earlier in the week, we saw the countries they addressed themselves as D8 countries, that's developing countries, Egypt, Nigeria, all they came together, and the focus is to deepen cooperate, of course, and address energy and currency crisis. What do you think would be the focus of all of this? They're talking about alternative trade financing, looking for ways they could actually address this energy issue. Do you think they could have a headway with all of these discussions?
Sure, that's actually a very important thing. I mean, one of the things they say is that, they say you should never let a crisis go to waste. But unfortunately, Nigeria just did that, sufficiently. If you look at the change, whatever change or whatever policies you do have, the effects should be inward looking. Things should be open and, of course, promote exportation of oil. Nigeria is just doing that. We are technically an oil exporting nation, but of course, if the oil has to be, or crude has to be refined externally and then brought back to Nigeria, that's again demand destruction, like I mentioned earlier. So, but when it comes to trying to tackle, or as a crisis, trying to affect the energy the energy crisis in Africa, and of course, which is affecting our naira. If you're talking about how to affect these things, then with textbook case doesn't really work for Nigeria. There's so many things we can do. Of course, one of the other things is, I think one of the data that came out is we actually spend more money in servicing the debts than we actually make. So I think we probably need to firstly, and I'm sorry, we tend to say this all the time, we need to address the problem from inside before we even think about how we can tackle all these macro indices or macroeconomic policies. Well, one of the discussion I had yesterday was, how are we looking at? Because right now the naira is just on a free fall, surging to its all-time low, whichever way you want to look at it. So how do we even tackle that? And one of the things I realized, and I know our central bank, which is supposed to be an independent entity, but unfortunately right now, I think that the number one is in charge of that. So again, when we're looking at, before we even bring out so many factors into this situation, we've got to actually redress the present factors that we have in Nigeria.
Let's talk about the railway workers, also in the UK, who are protesting and the down tools. Tell us, what is responsible for this?
So quite a few things are responsible. Again, so the railway, which is one of the UK's global, or sorry, traditional areas, environment, which is one of the most revenue generating corporations for the or sectors for the UK, and of course one of the most important things, because it's favored over right here, the public transportation over private transportation. So now they do have a right, because they've been controlled or been they're heavily tied in with the union. And one of the things is that when the pay is not great enough, of course people will riot, because when it comes to that point whereby you're getting paid, or the inflation is even way more than your money in your pocket. It's burning holes in your pocket. It doesn't make sense. You got to feed your family. You got to pay your mortgage. You got to pay your bills, and you got to feed your children, and then you've got to make a living. But right now, while they do have a pay rise, some sectors have not even got a pay rise. While even though they do have a pay rise, but majority of them cannot even feed their family, because inflation is eating right into the thick of things. So. And unfortunately, they did call a strike. It's been God knows how many times they've called a strike this year. I think yesterday, from about 350 trains in certain areas, they only had about 50. And of course, the government has been encouraging people to stay home, just to be able to cope and deal with this thing. But one of the other things is this thing has actually been now turned into a little bit of politics, because we have certain sectors that are not allowed to go on strike. Of course, maybe for ethics reason. If you look at the medical sector, it could be for ethics reason, and the police, of course, who can't go on strike. And of course, these guys are not getting the same treatment. So there's some policy which is being currently debated, of course, as to, do these guys have a right to be able to go on strike? And that's the that's the politics aspect, or the angle that they've been talking about. So again, that's something we've got to look out for. But at the time being, as long as inflation persists, I believe there will be more of these strikes that will be panning out over time.
I'm also thinking that investors who have the money, even if they're the portfolio investors, that's the come around with the big briefcases, with all of the dollars and the pound sterling, do you think that they will be sitting on the fence at this time? What kind of investment decisions do you think they will be taking at this very critical time, considering all that we face? Now, I'm talking about a global issue that that stares us in the eyes: Russia and Ukraine crisis.
Sure, that's a really great question, actually. So where do you put your money right now? Like they usually say, people say cash is king, but there's been a destruction of the dollar. I mean, the 2020 we had a huge rally, but that was always because the dollar was actually just going all down. Dollar was just tanking, like they say in the markets, and of course the government have actually been printing a lot of it, thereby eroding the value of the dollar. But right now, inflation is staring at us at the face. We've got the big giants out there, Russia and Ukraine, who are affecting the world globally. We've got energy, which has been destroyed. And of course, dollar's been ramping up right now. So it actually works a little bit better, even though we do have inflation. You've got to think about the lesser of the evil. So it works better to be able to hold your money, unfortunately, in dollars, not in Nigeria, because of course, Naira has been gradually, greatly eroded, number one. Number two, it works out to be on the, to pack some of your money in the dollars. Commodities has actually been very good, when you look at the oil. But oil is gradually been coming down recently because when you look at the CPI, the Consumer Price Index, from what's been coming out from the prints, so the core CPI has actually been coming down. Core inflation seems to have peaked. But energy is the key debate here, which keeps ramping up. And as like yesterday, for example, with Russia talking about cutting off Germany, turning off the tap on the gas angle. So we've got to look at a grim winter, and we keep getting the warning. It's not just the UK thing; it's a general Europe-wide. We're getting the warning about gases will go up over winter. So right now, I would say, of course, it works out. This is what people are generally should be doing. It's more of a sell the rally. So if you do have an asset which has actually been on a rally, on a good rampage with a good profit, right now it's the time to just park some of that money in your dollars. And if you want to put some of the money, invest in some oil, never let a crisis go to waste, unfortunately, as sad as it might look like. So oil is some way to go, but of course, every crisis would have to peak, and gold itself is not really doing much favor. So cash is king right now, but at the same time, you've got to be able to look out for what's going on in the world and pack some of the money in the economy. In the oil. Copper, which is another one that tends to look at the way the world goes. When copper goes up, it shows the world is on the brink of tethering up a little bit as well. But copper's actually been at a very multi-year lows as well. So right now, cash is king with some money and to take advantage of the energy crisis in oil.
Already for us in Nigeria, we know what is happening now when it comes to purchasing power being low. And of course, every other thing you're buying seems to be on the high side. Now, you're in the UK. Let's wrap up on this note. What is your outlook considering all that we see? Because it's just, we have to face reality and project and reproject. Even the likes of IMF and World Bank has been reviewing figures, and some even say a recession remains imminent. What is your outlook in its entirety?
Sure. With the UK being, one of the giants of the world, I think we're looking at the sixth in terms of economy. You're right. Among the OECD countries, UK has actually had the worst among them, and among the G7 countries or G7 club, UK has got the worst projection among them. And of course, the UK is going through a leadership crisis at the moment, for which only a certain portion of the population are able to have a say, of the Conservative Party in this case. Again, we do have some good quality leaders out there. People are calling for a general election. Who do we think can handle it best? Personally, it's something I'm going to leave to the electorate, myself included. We don't know. That's number one. Number two, the pound, with the sterling, that actually hit a really bad low. Went to as low as 1.17 against the dollar. Even even euro at some point actually going below the dollar. So, and that shows the state of things. The growth has actually been revised to a negative next quarter. So we're not even looking forward to the end of the whole 2022 at all. We're not looking forward to any good news in any way. So if anything at all, we're not even, I think people are generally just parking their money, and no one is actually investing in capital projects right now, even though this might probably be the best time because things are cheap, capitals are cheap. But at the same time, what's the point of investing in a project when you know that it can't really generate any revenue for you over time, or you don't even know what the future looks like? It still looks ultra grim right now until the power tussle is taken in shape, and then we do actually have real, because both leadership campaigns right now. I mean, one is talking about hiking taxation in order to be able to combat inflation, while the other one is saying, okay, do you know what? We can actually reduce your your taxes, and we're going to generate money from elsewhere. But at the same time, debt's got to be paid to the IMF. But generally, things are grim. Whichever way you see, not until you actually see these fiscal real policies being implemented, good for people's pockets, real job growth out there. Because the labor field is actually strong, but at the same time, they're not getting paid enough, and people have to be taking 2, 3, multiple jobs in order to be able to feed themselves. So things are generally grim right now. We're not seeing anything for 2022. Unfortunately, it's just been a horrible, totally horrible year all round. But it's just a pain we all have to bear, the brunt, until 2023. But until then, everyone just have to keep their hopes up and manage accordingly.
Okay, definitely keep our hopes high. Thank you so much, Mr. Gbenga Onifade, our startup founder of Wealth Hackers. Do enjoy the rest of your day.
Thanks for having me.